Hello, everyone. My name is Zane Agostini. I'm CEO of CID Insurance Programs, and I want to welcome you to our webinar this week called Finding Your Competitive Edge and Becoming a Master at Workers' Comp. I want to introduce our instructor for the day. It's Darby Fisher. She's our work comp underwriter, very knowledgeable, and will be able to give you some great tidbits on workers' comp and how to be competitive. Last but not least is Jacob Cole. He's our marketing coordinator, and he makes sure that these webinars run smoothly amidst everything else that he does in our marketing department. So let's get started. So of course, we're going to have logistics. You will be muted but able to hear, but your voice is really important to us. So please pose your questions in the chat room at any time throughout the webinar, and we'll answer those for you as we go. And be sure to take our short survey after the webinar. It will pop up, and again, your feedback, your voice is really important there too for us. So let's take a look at our objectives. So workers' comp is an interesting beast. Everyone's writing packages, and a lot of times they forget about the workers' comp. So Darby's here to teach you how to be successful and not to lose your existing policies to the broker that has the work comp. So let's learn about. She's going to teach you about some successful work comp strategies, and then how to sharpen your underwriting skills, because that the larger the premium, the more you need to underwrite the risk. And then secondly, how do you differentiate yourself from the competition? That's always the $1 million question, and there are some pointers that she's going to share with you that will help. And then again, we've got this moving target with the economy, so let's talk about the best classes of business to target. So I'm just going to get us started with this first page, and then I'll turn it over to Darby. Successful strategies for managing your work comp are super important. That's where we really want to start. So effectively managing all facets of your workers' comp policy is key to successfully building a work comp book. So she's going to be talking about types of businesses that will be doing that you would want to go after, and how to be a specialist in each of those classes of business. Sharpening your skills with quoting, closing, and binding. That's all part of what I call a sales equation, and you've got to work it in order each part equally to understand, to achieve the close and the bind. Understanding the underwriting of different size businesses. So I was talking about class of businesses. Also, you really need to look at different premiums. We sort of put it in the small, medium, large categories, and Darby's going to talk about that so that you better understand the level of underwriting for different sizes of business. And then presenting value-added insurance solutions with competitive premiums. That's really the key to success with binding work comp, especially your larger policies, because there's so much more that you can share and offer in value to the insured, especially if they've got a high mod, they're experiencing claims, et cetera, et cetera. And then another key to success is to efficiently manage policy activity from endorsements to audits throughout the policy period. So many brokers tend to lose their policies that don't need to cancel due to endorsements not being managed, and also audits not being paid attention to, which will potentially cause a policy to cancel. So this is what Darby's going to be talking about. I'm going to turn it over to her. Darby, you take it away.
Alrighty, everyone. Good morning. So Sharpening your underwriting skills. It's important to continuously be doing this and understanding the different premium categories that are going to impact your book of business. So, I want to briefly go over the different premium categories of underwriting, and those are your small, medium, and large size businesses. Small business is going to be that premium range from about 2.5 thousand to 15. They're risks that are quicker to quote because they don't have as many exposures. The payroll and employee count is typically lower. They don't have a claims history. So most of your book of business is going to be built on policies of this size. The medium-sized business falls within that 15 to 50,000 range in premium. This is going to be your sweet spot. They help to build the premium volume within your book. They generally incur lower loss ratios, so they're more stable than larger businesses, especially on the renewal side of things. However, they do require a deeper analysis in order to obtain a competitive quote. So, understanding what is required of you when underwriting the risk is going to be really important in order to get them a competitive proposal. Large size businesses, those are going to be those premium over 50,000. So they're going to add fast production volume to your book of business, but they will have greater exposure, more accidental exposure, potentially higher rated class codes. So again, your underwriting skills that you continuously need to be understanding the marketplace, what your carriers are doing well in, and what you're going to need from the insured. So that premium range that has the most competitive edge, it's going to be our medium-sized businesses, which we're going to discuss in our case study today. And that's because they're staying under the radar of the big insurance retailers that want the business. And they generally have an assigned experience mod that's under 100%, which results in a credit on the policy. Carriers are more likely to place additional credits on the policy as well because they want the business. And it's important to realize that it's not just about submitting applications for a quote. Understanding how to properly underwrite different sizes of businesses and exposures is going to give you that competitive edge over another broker. So when you get into worthwhile premium accounts, you don't just win them on pricing. So throughout this webinar, I want to provide you with the knowledge on how to prompt the interest of a business owner and successfully gather enough information to propose a competitive work comp policy. So as an underwriter, efficiently analyzing and understanding your risk is really imperative to proposing a competitive quote to your insured, being able to pique the business owner's interest by coming to the table with more than just pricing. So upon your review of their current policy, the classification of employees and loss history, you should be able to get an idea if you have a competitive market for this risk or not. So what I'll do is I urge brokers to obtain a copy of the insured's current policy, as it gives you a competitive edge by being able to determine where premium and rates need to come in when you're quoting with your markets. If you can't get that, getting the target premium at least, or the class codes on the policy, is still a big help in knowing which markets that you're appointed with that you should be approaching. That way you're able to get under the current premium and determine if the policy is structured correctly, so you can research the class codes and ensure these best fit the business operations, especially with risks such as like contracting. A lot of times the class codes are broken out by wage, so being able to verify that the employee is categorized in the right class code can save your insured a lot of money. Physical loss runs, those are one of the biggest indicators as to whether you're going to have a competitive quote for your insured. They're going to be mandatory with a submission on the medium to larger sized. So you'll need those up front. A lot of times I receive submissions and you can tell that the premium is going to be large just based off of the payroll, but I'm not receiving loss runs, just the Accord 130. And that slows down the process of me being able to get a quote released from the carrier because they are required to review them. So with poor loss history, it's likely going to indicate the insured's experience modification rating may be over 100%, resulting in a debit on the policy. Therefore, it's even more important to know which markets are going to apply additional credits or have competitive rates. So some carriers will look for claim severity. Others are making a decision based on the frequency of claims occurring. So it varies with each market. So even if the insured does have poor claims history, you can guide them in the right direction on how to turn it around. for those who are quoting smaller size policies with markets, I just want to touch on this. The biggest setback is receiving an incomplete application or information that doesn't make sense. With your smaller businesses, you should be able to get that quote to the market and hopefully receive it by the end of the day. That is, if you have everything up front. That's going to be the difference in binding the quote over another agent, because having to go back and forth for additional information, it's wasted time when you can be utilizing that on submitting to markets before another agent. So success goes beyond price. A business owner is more likely to write with you if they feel you understand the risk thoroughly and are working in benefit of the insured in more ways than just pricing. So as we mentioned before, your job is looking to save the business owner in more than one way. The list you're reviewing are some of the key work comp trigger points that will get the attention of a business owner when proposing the quote. As I mentioned previously, if you're able to get a copy of the insured's current policy, you can see the structure and the classifications used. Potential misclassification of employees can potentially lead to problems at the time of the audit. So if an employee is classified incorrectly, maybe in a lower rated class than they should be, the insured will end up owing premium to the carrier. On the other end, employees may be classified in a code that's rated higher, where they can be moved to a lower rated one, inevitably saving the insured premium. If I'm ever unsure of correct classification, I'm always going to check with the WCIRB for California risks or the NCCI for risks outside of California. You can shoot them an email with a little bit of a description, letting them know you're unsure of what the best classification is, and they'll come back to you and let you know. That's been super helpful, especially on those really niche businesses where maybe employees are doing uncommon jobs. So when obtaining information on the employee's classification, it's always best to gather a list of their duties. When I receive applications that just state maintenance work or groundskeeping, I'm always going back asking for a list, because you want to make sure that employees aren't performing duties outside of your market's appetite, and so you can also confirm this with the carrier that everything they're doing is being covered. If your insured has exposures that are rated high, taking the risk to markets where you know they'll apply additional credits based off of years in business, the territory they're rated in, schedule credits for having clean claims history. Those are all important things. I want to stress the importance of knowing your markets well, because having this knowledge will give you an edge over another broker. And you can expect any contracting, manufacturing, residential, janitorial exposures to be higher rated than other classes because of the likelihood for a claim occurring. So balancing that out with markets who apply additional credits will help secure a bind. Credits can't be applied for those whose premium is under the minimum threshold, so those smaller size businesses. So when you're quoting risks like that, you want to take it to markets that you know have competitive rates for those class codes to offset that. And as I mentioned previously, with businesses that have a frequency or severity problem with claims, a competitive edge is providing carrier resources and information on how to mitigate claims in the future and inevitably bring their mod down, which we're going to discuss more in our case study. So key strategies for securing the bind order. So once you've obtained a competitive quote from your markets, how are you going to win the business? So you need a strong close in order to secure the bind order, making a formal presentation that you shows premium is competitive because of either aggressively priced rates, the insured's experience mod, or clean claims history. By being able to speak knowledgeably about the classifications and rates applied, or carrier services such as loss control and claims management. These are all things that are going to help you secure the bind for you. The message to be getting across to the insured is you have the best interest of the insured and that they can rely on your expertise opposed to someone else in managing their workers' comp policy. So I want to go over some of the best business classes to target at this moment. While the market is always changing, workers' comp does seem to be a little bit more stable right now rate-wise than most. So taking advantage of the current marketplace and going after business classes that you know you can get a competitive quote on should be the priority. These are some of the best classes of business to target right now, and we also specialize in them. Restaurants, more palatable, easy to quote exposures like deli shops or small payroll fast food chains. Um, we also can do the larger tavern or bar, which will still be competitive, but it's going to take additional time to review by an underwriter. Schools and colleges, janitorial, and that could be commercial or residential. Auto services and sales, so your rubber tire dealers, your auto body shop, contractors. CID specializes in artisan contractors, so those electrical, plumbing, carpentry, all of those types that fall within the artisan contractors. Those are doing really well right now with our markets. And then manufacturing, property management. So you should be going after businesses that are trending as competitive classes. That's what you're looking for here. This is just a list of the few types of businesses, but becoming aware of how rates change yearly and affect which markets are competitive in that class of business, it's going to be your competitive edge over another broker. So getting really familiar with what your carriers are doing well in, you can target and go after businesses like that. So writing good business that stays on the books is the best way to be competitive, a competitive broker in the workers' comp arena. So how you do that is by selecting stable payroll-driven classes of business. Some of those are going to include retail stores, automotive exposures, potentially restaurants. As I mentioned previously, coming to the table with additional items like carrier services or confirmation of the business structure is going to help you win the business. So once you've bound a policy, it's important to maintain a meaningful business relationship with the insured. That way, they aren't seeing what other brokers are out there. And once you've bound the policy, it's not over. You need to continue that conversation throughout the policy term with them. If there's been any payroll, location changes, any claims that have occurred. Lastly, binding larger policies, they may be intimidating at first, but the more you write larger size premiums, the better you become at managing them and going after them. These are going to add fast production volume to your book of business. And then once you have bound that policy, it's important to go over the binding and payment process with the insured. I get a lot of questions on this, but workers' comp policies, they're all direct billed, so financing is not going to be an option. And it's the insured's duty to make payment directly to the carrier as they're being invoiced directly from the carrier. So there's the payment relationship is directly between the insured and the carrier. Of course, it's important that you help facilitate payment being made on time in order to avoid late fees, short-term cancellations, or pending cancellations being issued, so that way you keep your business on the books. So throughout these next two case studies, we're going to be learning how to find your competitive edge when selling a risk to your carrier and the business owner. So easily identifying what items are going to be of value to you when analyzing the risk and quoting with the markets will give you that competitive edge over another broker. The bulleted items give me a general idea of the business structure. As I mentioned previously, the biggest setback is not having completed applications. So an Accord 130 is the standard application that's going to include all of these bulleted items. And in reviewing, this is a janitorial business that's been in business for 5 years. And with that does come some claims activity. The business entity is a corporation, which means you're going to need the ownership breakdown of the corporation and if owners wish to be included or excluded from coverage. A reminder when binding the policy that exclusion forms must be completed for each owner and submitted to the carrier at the time of binding. With 7 employees and payroll close to 300,000, I can infer that the premium is going to fall within our medium-sized range. That's because janitorial businesses, they tend to have higher rates due to the incidental exposure. So janitorial exposures are one of those businesses where one class code, more than one class code can be assigned based on the specific work that's being performed. Contractors, it's like, as I mentioned, is another example of that. So janitorial work is actually broken up into two classes: residential janitorial work versus commercial janitorial work. So anytime I receive an application, I'm checking to see what type of work they're performing. And if it happens to be both residential and commercial, I would need the payroll broken out by class code. As the market rates, they're going to be different. It's knowing small but important items like that can differentiate you from another broker and save you time getting the submission to market. So when the payroll and premium are higher, you can anticipate additional questions from the carrier. With a janitorial risk, I'd be confirming the employee duties to ensure they're performing standard janitorial work, no window cleaning, and making sure that no employees do work above ground, as some of those markets can't cover those exposures. So getting to a place where you know what's going to be asked of you by the carrier so you can have this information up front is going to be the difference between you and another broker. When the payroll and premium are higher, you can expect these questions to be asked. So for this size of business, you want to take additional time to review the experience mod and loss history. In this case, they're rated at 87%, 2 claims closed. So if you aren't sure if the insured is experience rated or not, you can look at the WCRB for California risks or the NCCI, and you're able to download an experience rating sheet where you can access information on their experience rating history. So I encourage you to keep an eye on the claims activity throughout the policy. This is a conversation worth having with the insured before binding the policy and once it's bound. Questioning what their management looks like, safety measurements that are implemented in order to keep employees free from injury. That's all really important things. Having frequent conversations with the insured helps to save premium and maintains the relationship with the business owner. So going in depth a bit more on the overall summary of the risk, we do know there's some claims that occurred, but the experience mod rating is it's at 87%, which is great. It is a credit on the policy. But what's important is keeping the mod around that remuneration. That should be the focus. So making sure your insured is aware of the impact that has on their policy is very important, as oftentimes growing business owners don't realize that claims can inevitably get out of control. And once that's the case, it takes a little bit more time to get them back on track. So many of our appointed carriers offer loss control services, and that can be your competitive edge when presenting the quote to the insured. Just because they don't have a poor claims history now doesn't mean you shouldn't be proactive and utilize what the carrier has to offer. And having a detailed loss history, completed Accord 130, this provided me the information I needed and the insured's experience mod worksheet as well. I submitted to markets that I know are competitive for janitorial and could bind the policy within 3 days. So our next case study, it's going to be a little bit larger, and this is our restaurant exposure. Again, we're looking for the bulleted items in order to quote, which will be listed on the Accord 130 you should have. This business has been around for 11 years, so having claims activity is not surprising, especially in this industry. The entity is an LLC, so again, you're making sure ownership equates to 100% and knowing if officers wish to be included or excluded from coverage. There's 2 locations in California, and they have close to 20 employees. Just by looking at that information, you should be able to have an idea that the payroll and the premium on this account is going to be higher. With their experience mod rating at 109% and payroll over $1 million, premiums around $60,000. Because there's many different types of food exposures to help understand where this business lies when quoting with carriers, checking to see if it's a sit-down or dine-in restaurant, a fast food business, a local deli. There's a wide range of restaurant exposures, so understanding the operations in order to know what additional information to be looking for is going to give you an edge. There's a lot of small restaurant exposures that are easy to quote and don't require further underwriting review. Something to keep in mind, the more palatable like deli shops and small payroll fast food chains, this one being a restaurant tavern, and reviewing obviously the risk summary and payroll for this business, I know it's going to fall on the larger size premium range. So you want to understand the risk as if you're the business owner yourself. That's going to be your competitive edge. And getting to a place where you can anticipate the questions being asked by the carrier, so you have this information up front, is going to be the difference between you and another broker. So questions you can anticipate being asked for a restaurant exposure: do they have live music? Do they offer delivery? What's the percentage of alcohol being sold? Do they have bouncers or security ID? This is where a supplemental application will be helpful to obtain from the insured, as it is going to include these additional questions. So when the payroll and premium is higher, you can expect this to be asked by the carrier, and knowing this risk extremely well is going to give you a competitive edge. So this insured has had 6 losses, incurring $75,000, and one still open. With an experience mod rating at 109, they're going to be receiving a 9% debit on the policy. And since an experience mod is a rolling figure, it may continue to increase as long as this claim is still open. So your competitive edge when presenting the quote, offering claim control services from the carrier. I would be looking for information on the claims as to whether the employee that was injured is still working for the business, if the business owner has implemented safety training or measurements, how frequently are employees given refresher courses on workplace safety. Some of these questions may be asked by the carrier, but it's also going to be helpful to you when going to the carrier and potentially asking for additional credits to be applied to the quote. That's going to serve as a competitive edge, having that additional information on the claims history. The carriers want the business just as much as we do. And with information such as preventative measures, the underwriter can potentially get additional credits approved. With the insured being with 2 carriers in the past, you want to assume this is new business to your agency. You want to understand the insured's coverage history to get an idea of how you can keep the business on your books. And it also has a lapse in coverage, which isn't unusual these days as everything is slowly getting back to normal. We're finding in the last 6 months or so that restaurants are finally getting back on their feet and hiring employees again. So carriers are aware of the current industry, and while in the past they may have declined a risk with the lapse, they're more likely to quote the business now and still present a competitive quote. So after underwriting the risk with the required documentation, I feel confident going to market because I can answer the questions about the business operations as if I'm the owner myself. Again, that's going to make all the difference when analyzing and submitting risk to the carriers. So once you bind the new business, you don't want to lose it at renewal. Binding a risk doesn't ensure you're going to keep it on the books, so each renewal you work should be treated as new business, as there's more on the line. When binding the account, you should assist the insured in making payment to the carrier. As I mentioned before, they're all direct billed, so the insured is always going to be invoiced directly from the carrier. You should still be looking to save the insured in more ways than just premium. So at each policy expiration, a mandatory final audit is required to be completed. So assist your insured with this. I see a lot of problems, insureds just not submitting the requested documentation or complying at all. Ensuring that classifications are up to date, you're receiving accurate payroll and location information, you're reviewing their loss history throughout the policy term to see if they're anticipating a premium increase or decrease depending on any claims occurring, and take the time to review the renewal as it maintains the relationship with the insured. Oftentimes, brokers may bind a big account and then it's not touched again. That gives the insured the opportunity to see what else is out there. And that's how you're going to lose the policy at the renewal. So maintaining a relationship with the insured, and more importantly, the person who is the decision maker on the insurance is imperative. So if you implement these strategies, you're going to be competitive in the workers' comp arena, and you're going to keep business on your books. I'm going to hand it back to Anae.
Great information, Darby. Thank you so much for sharing with everyone. This should help everyone become more competitive with workers' comp, no matter what the premium size is. And I want to thank you for all joining us. Make sure that you contact Darby. She's very responsive. She answers her email, answers her phone. So you can reach her to get assistance with writing any type of workers' comp that you come across. So, but make sure you check out the competitive classes that she talked about because that's where you're going to have the most success. So, in addition, please visit our website, cidinsurance.com. We've got lots of tools to help you be better at what you do. Proposal templates, marketing templates that can be customized, all kinds of learning tools, and of course our webinars. We have lots of a big inventory of recorded webinars on different coverages, excuse me, and different classes of business. Excuse me. Please complete the survey at the end because your voice is really important to us. Again, thanks for joining us today.